Are you frustrated with how slowly your savings grow and how much control the banks have over your money? What if I told you there's a way to take charge of your own finances and build your own bank, in a sense, right here in Canada? Hi, I'm Gregory Rozdeba, the CEO of Dundas Life. Over the past few years, I've helped countless Canadians find smarter financial strategies. At Dundas Life, we strive to make wealth building accessible and empower you with the knowledge you need to protect yourself and your family. In this video, we'll explain how whole life insurance can help you build long-term financial security while giving you more control over your money. We'll break down the concept of infinite banking, a strategy that lets you save money inside a life insurance policy and access it when you need it, without going through a traditional bank. We'll also cover why whole life insurance is a key part of this approach, how it works in Canada, and the pros and cons to consider. Stick around and learn how the strategy could work for you. But before we get started, click the like and subscribe button below to see more videos like this one and learn more about how to best manage your money. Now let's dive in. First things first, what is infinite banking? Think of it like this. Instead of relying on a regular bank for most of your financial needs, you use a specifically designated whole life insurance policy. Your policy's cash value effectively becomes your own personal banking system, while protecting your family and securing your future at the same time. The concept originated with Nelson Nash, who introduced the idea that you can store money in a safe and liquid account, like the cash value of a whole life policy, and then borrow against that capital whenever you need funds. This could be for an investment in your business, a down payment on your home, or even to cover an unexpected family emergency. Now, don't worry, you're not applying for a banking license or becoming an actual bank. That's difficult in Canada. You're simply taking charge of the banking part of your finances. The key idea is to store money in your policy's cash value and borrow against it, rather than withdrawing it, so your cash value keeps growing without interruption. And the best part, the strategy is fully legal in Canada. It fits right into our existing life insurance framework, giving you a reliable and tax-efficient way to manage and grow your money. Why is the idea of infinite banking so powerful? Think about traditional banking. When you deposit money into a savings account, the bank doesn't just let it sit out there. They lend it out to other people and businesses, charging interest on those loans. That's how they make money. With infinite banking, you're essentially replicating that process, but you are in control. You're lending to yourself, and the interest you pay goes back into your policy. So why use whole life insurance for infinite banking? Let's start with the basics. There are three main types of life insurance in Canada. We have term life insurance, which covers you for a set number of years, and we have whole life insurance, which lasts as long as you live. Term life insurance is often cheaper up front, but it doesn't build any cash value. Once the term ends, the coverage ends. Whole life insurance, on the other hand, lasts your entire life, meaning you have coverage as long as the policy is in force and has a cash value component that accumulates over time. Universal life insurance is another option you might consider. It lets you invest part of your money in the stock market, which generally offers higher returns. However, this also means more complexity, higher risk, and extra fees that can eat into your gains. In contrast, whole life insurance policies provide a steady, predictable growth for your cash value, so you can always know how much you can borrow. Since infinite banking relies on reliable growth, we recommend sticking to whole life insurance versus universal life, which can be more unpredictable. What exactly is this cash value, you may ask? Picture it as a tax-advantaged savings account inside your policy. Each premium payment goes partly to cover the insurance and partly to build up your cash value. The growth is guaranteed in the insurance company. In Canada, that growth is tax-free as long as the policy qualifies under federal guidelines. However, not all whole life plans are suited for infinite banking. Some are structured to prioritize a bigger death benefit, while others emphasize rapid cash value growth. For infinite banking, you need a policy with high early cash value so you can borrow against it sooner. This often involves maximizing something called paid-up additions while minimizing the base insurance premium. Paid-up additions are optional contributions that allow you to add more money to your whole life insurance policy, increasing both the cash value and death benefit without requiring future premium payments. They help speed up the cash value growth, making your policy more efficient for borrowing and for building long-term wealth. The idea is to keep the death benefit at an efficient level so you can build more cash value without overpaying on the insurance portion. Now you might be wondering, what's the lowest death benefit amount needed to allow the maximum amount of cash to build in the cash value? This is important to consider because the size of your death benefit determines how much you can contribute to the policy. The higher the death benefit, the more money you can direct towards the policy's cash value. But you don't want that death benefit to be so large that your premiums become unmanageable. Finding the right balance is key, and it's an area where professional guidance from an advisor that specializes in infinite banking can make all the difference. At Dundas Life, we've helped many clients to set up their policies in the most efficient way. All in all, whole life insurance is the best tool for infinite banking because it offers guaranteed growth, safety, and liquidity. Unlike stocks or mutual funds, whole life insurance provides a guaranteed minimum growth rate. You can borrow from your cash value whenever you want, and the money you borrow isn't taxed because you're simply using the policy as collateral. Products like Universal Life are sometimes marketed as better for growth, but they carry more risk and potential hidden costs. When you want predictability, whole life stands out. Now let's dive into the specifics of how whole life insurance actually works with infinite banking. To start, you fund a specifically designed whole life insurance policy. Each time you make a premium payment, part of it goes towards the death benefit and part of it goes to the cash value, which grows tax-free over time. When you need to fund an investment or a major purchase, you borrow against the cash value. You repay the loan to yourself with interest, and your cash value continues to grow as if you never borrowed the money. This is what we call the double dipping effect, where your money is working in two places at once, growing in the policy and potentially generating returns in whatever you invest the borrowed funds in. Let me give you an example. Let's say you buy a whole life policy for $1,000 a month. After a few years, you build up $100,000 in cash value and you borrow $50,000 to invest in a rental property. The $100,000 continues to earn interest in your policy while the $50,000 is also generating rental income. You're in control of the loan terms, repayment schedule, and how you use the funds, giving you flexibility to make decisions that align with your financial goals. If you're finding this video very helpful so far, don't forget to click the like and subscribe button down below. Now let's talk about what makes this strategy so appealing, especially for Canadians. First, you get to enjoy tax-free growth and tax-free loans. Since Canada allows tax-free growth within certain types of life insurance policies, you can accumulate funds without the annual tax drag you'd get from regular investment accounts. The loans you take also aren't considered taxable income, as you're borrowing against your policy. Tired of bank approvals, credit checks, and rising interest rates? With your own policy, you set the terms. It's your private line of credit, and you decide the repayment schedule. Another thing is, because you don't withdraw your funds, your balance never stops earning. You can have a huge impact over 10, 20, or 30 years. If you use borrowed money wisely, like investing in real estate or your business, you could earn more than the interest you pay yourself. And of course, don't forget, at its core, you're using a life insurance policy. So there's a death benefit that can be passed along tax-free to your family or estate. This can be used to pay off debts, cover estate taxes, provide for your family's living expenses, or fund future generations' education. It's a way to ensure that your financial legacy continues long after you're gone. Now, I know some of you might be thinking, is this too good to be true, or is this a scam? I can assure you that infinite banking is a legitimate strategy, but it must be done correctly with a properly designed policy. It's not just for the wealthy. While bigger premiums mean faster cash value growth, you can tailor these policies to fit various income levels, including your own. It's all about designing it correctly and being consistent with contributions. Some people worry about the opportunity cost of putting money into a whole life policy. They think, couldn't I get a higher return by investing in the stock market? And that's a valid question. But the answer is, possibly. But the stock market also comes with risk. You can lose money. With whole life insurance, your growth is guaranteed. It's a trade-off between potential higher returns and guaranteed safety. Another concern is the long-term commitment. Infinite banking is not a get-rich-quick scheme. It's a long-term strategy that requires patience and discipline. It takes time for your cash value to grow to a significant amount. But over time, the benefits of uninterrupted compound growth can be substantial. While this all may seem complex, our team at Dundas Life is here to help you understand your options and see if the strategy is a good fit for your financial goals. So ultimately, infinite banking with whole life insurance is a powerful strategy that can help you take control of your finances and build wealth over time. You're using the same principles that have made life insurance companies and big banks successful, but shaping it to meet your personal and business needs. Infinite banking is not just about borrowing money. It's about changing your mindset about money. It's about taking control of your financial future and building a system that works for you, not necessarily the banks. It's about creating a legacy for your family and future generations. If you're interested in learning more about how infinite banking could work for you, click on the link in the description below to book a free consultation with a Dundas Life advisor today. We can help you understand your options and see if the strategy is a good fit for your financial goals. Don't forget to like this video and subscribe to our channel for more videos on life insurance and financial strategies for you. We're committed to providing you with the information and tools you need to take control of your finances and build a secure future. Thank you for watching, and we look forward to helping you achieve your financial goals.